Hi, how's it going everyone? Today I'm going to be talking about my worst investment ever. I'm going to be talking about the crash in the cryptocurrency Luna and its corresponding stablecoin TerraUSD and the implications of this crypto crash and how this crash can destabilize the entire crypto market. Now, I am a holder of the cryptocurrency Luna and it has lost more than 95% of its value over the past 3 days. Now, if this has happened to any company stock, you would think that the company has burnt down or something. Now, for those that aren't familiar with Luna, it's a sister token for the supposed stablecoin TerraUSD with the symbol UST. So what it's meant to do is have a stable one-to-one peg to the US dollar. Now, it's an algorithmic stablecoin, which means that it uses a series of algorithms to maintain this one-to-one peg with the US dollar without having actual assets to back it up in reserve. This means that it is backed by a set of codes, which is another way of saying that is literally backed by nothing but people's hopes and dreams. Now, the algorithm can get a little bit tricky to explain, but the simplest explanation of how it's supposed to work is that UST and Luna coins are interlinked together. So when you buy the UST stablecoin, amount of Luna will get destroyed or burnt in crypto terms, thus increasing the value of Luna while keeping the value of UST at the same. So the pool of UST would expand. The same thing happens in reverse. Now, if you buy Luna, an amount of UST gets burnt, so the price of UST goes up slightly. This constant buying and selling exchange allows the price of UST to remain stable, but it only works as long as there's a constant supply and demand in both ways. Now, it allows the traders and people that arbitrage the cryptocurrency to make some money from the difference between the buying and selling of the two cryptocurrencies. See, this is all fine when everything is going up, and this is what's been happening over the past few months. Now, part of the reason for this is that people are constantly putting money into the Anchor protocol. Anchor protocol is one of the largest DeFi protocols on the blockchain, and they are also created by the founders of Terra. Now, you can earn up to 20% return by staking your UST on the platform. Does this sound too good to be true? It probably does, because it's not sustainable for the long term. So in this situation, you have people lending out the UST, hoping to earn up to 20% interest. And then you have people borrowing from this pool of USTs for other activities. Now, currently, as it stands, there's significantly more people that's willing to lend out the UST to earn interest compared to people that are actually borrowing out the UST. This means that they are paying out a lot more in terms of the yield than the people are actually borrowing money and repaying in interest. So this means that even though they have a reserve for paying out the lenders that are staking their UST in this particular protocol for this 20% yield, this reserve is constantly shrinking because there's not as many borrowers. But see, people are just consistently chasing yield returns, so they put more and more money into the Anchor protocol. Thus, the reserve has been increasing over the past because people have been purchasing more UST. But what happens when people start selling the UST? Now, Luna coin is supposed to buffer the selling, but if the selling happens too quick, UST may lose its peg to the dollar, and that's exactly what happened. Over the past few days, there has been many large withdrawals of UST, thus pushing the price down. So new Luna coins got created to try solve this problem of the value of UST dropping, which drives the price of Luna down. And it just all quickly becomes what people coin as a downward death spiral. Overnight, the price of UST dropped to as low as 26 cents to $1. And for something that's supposed to be a one-to-one peg to a US dollar, is an absolute massive sell-off. Now, people become more fearful and then starting selling off the Luna cryptocurrency as well, causing the sell-off cycle to continue even further, which resulted in the Luna coin losing more than 95% of its value. So the Luna coin went from a high of around $110 just a month back, all the way down to less than $1. Now, what made all of this even more surprising and problematic is that UST and Luna are not just some small altcoins that most people have never heard of. Now, they used to be among the top 10 cryptos in terms of market cap simply just a few weeks ago. Before all of this sell-off happened, there are more than $18 billion of UST in circulation, making it bigger in terms of market cap than companies such as Domino, American Airlines, and Etsy. As a result of this crash, users that have staked tons of money on Terra's Anchor protocol have lost hundreds and thousands of dollars. Now, people's life savings have been wiped out, and for many people, it's been a very, very sad couple of days indeed. The founder of Terra Labs, Do Kwon, says that Terra Labs has around $3.5 billion worth of Bitcoin in reserve that could potentially be used as a reserve currency to stabilize the price of UST. So far, Do Kwon has stated that they are not trying to exit their Bitcoin position. The problem with using Bitcoin as a reserve currency is that during a crypto market crash, the crash would affect Bitcoin as well, causing it to lose value. So selling Bitcoin or loaning out Bitcoin to try stabilize the value of another crypto asset such as UST would result in downward selling pressure of Bitcoin, causing the value of said Bitcoin to drop even further. And again, this is not a sustainable model in order to maintain the value of UST. What will probably make more sense is if they are collateralized to a slightly different form of asset instead of just another cryptocurrency. As I am writing the script, the Luna coin has dropped to a value that's less than the value of the UST that it's supposed to be backing, meaning that the entire backing system has completely capitulated. So Luna coin cannot be used to back the UST anymore. So after an event like this, it's going to be extremely hard for people to have faith in the crypto system when such a large cryptocurrency basically gets flipped on its head within 3 days. Now, many people will point the blame to big whales or institutional traders that try to destabilize the stablecoin. But this is the exact problem with these kind of decentralized finance crypto systems. There is no legislation that can save you when something goes wrong, and you have to realize that when you are putting money into crypto. Algorithmic stablecoins have been attempted in the past, and they have failed again and again. So do I think I will get my money back? No, I don't think so. Now, founder Do Kwon has tweeted out a long list of changes to be made to the Terra ecosystem, with a famous saying from many crypto rug pulls: Terra's return to form will be a sight to behold. Behold it is, we'll just have to wait and see. And this is why you should only invest what you can afford to lose, especially when it comes to crypto. So stay safe with your investments, don't get scammed, and I'll see you next time.